I think it's time. I pressed the wrong button. Hey, welcome to the closing beat, everybody. Sponsored by USA Today is one of the best advisors. I gotta figure out how to say that. I always stumble over those words. Jazz Wealth, one of the best advisors in 2023, according to the USA Today. I just have to have a way to say that because we're allowed to say it and stuff. But I'm not a bragger. I take that back. Anyways, happy Wednesday to you. Hope all is good out there with you. We got a lot to talk about here today. Fed decisions, of course, coming out. We've already talked about that. I did a Jazz After Dark to go through some of the language in their speech that they would give. They did add actually a few things, so things I didn't think they would add, but the gist of it we'll cover here in just a little bit. If you want to play Guess the Dow, jazzwealth.com/Guess the Dow and Wine and Wealth tomorrow night. Eric is going to go over all the beginning the tools, the features, everything that you have here. If you are a client of Jazz Wealth, and if you're not, man, where's your advisor? Huh? Where's that guy? When you pick up the phone and you call the advisor, he call you back? When you send him an email, does he respond back to you? I'm just joking. I'm sure there's a lot of, well, apparently there's other good ones on there. USA Today didn't pick just only us, so that's what it is. Anyways, let's take a look here. Let's just get started into it. The Fed has their decision. They raised rates a quarter point. Stock market initially, you know, what's fun about it? The stock market was just kind of like quiet, right? Not much going on here today. And then as soon as the Fed comes out, it gets all kinds of exciting. The new range for the Fed is 5 to 5.25%. That was expected. That is normal. Everything happened there. So the stock market reverts back to, is there a reason for me to buy? Should I be the one to pay that price like we've been talking about every single day? Do I want to be the first person to pay up for the market? No, I don't think so. I don't know what else is going on. Earnings are better than expected, but they lowered the bar so much. Anyways, as far as the Fed goes, they removed the comments. The committee anticipates that some additional policy firming may be appropriate. That's their way of saying they're going to pause. If you want more information on the geekery that wraps themselves around those comments, Jazz After Dark 2 days ago, we actually covered the Fed speech, their transcript, what they would say and how they would say it. So my thoughts, they continued to have a strong tone, just like we talked about the other day. They're going to need to have that strong tone. They can't have the stock market getting all excited and taking off there. But they changed a little bit. They said, we will use all available data in determining the extent to which additional policy firming may be appropriate. So that's a change. Additional policy firming may be appropriate is the part we expected, but that they would use any additional data, well, all additional data. So that means that inflation is now not only their main focus. They're willing to use jobs data and everything like that. So I suspect, I didn't watch the press conference, but I suspect old Steve Leisman there at CNBC, he's the man when it comes to this, that he probably asked that question. Like, hey, you said you were looking at inflation. Now what are we looking at? We're looking at the economy. We're looking at the banking sector. Are you concerned about that? That's why when they changed that term to say we'll use all available data, that's what got a lot of people thinking, they're nervous about the banks. Maybe we should be nervous about the banks. They're nervous about the economy because they were just looking at inflation. Remember, they said, we're getting inflation to 2% come hell or high water. Almost their exact words, by the way. And so now we're looking elsewhere. We need some more clarity on that. And that's what the Fed does. They leave you, guessing. Nonetheless, they didn't say that they were pausing. Remember that they were never going to say, I talked about this on that Jazz After Dark, they were never going to say, we're going to stop here, or we're happy here, we're going to pause here. They said that the committee anticipates that some additional policy firming may be appropriate. That's changed from saying that they see that additional rate hikes will be needed. So a little bit of a change there, and that's what the market does. Like that dude sneezes, and they look to see, like, why did he sneeze? What's going on there? Was he up late talking to the other Fed members? Like, that's for real. When I was it was high school, but maybe it was 12th grade, economics teacher told me who's the most powerful person on the planet, or in the United States, really. And we're all like, the president, man, the president. He goes, no, it's the Fed chairman or Fed chairwoman, if you're old enough. And so we're like, okay, cool. I remember hearing that from him thinking, that's not what? And being a kid, but now as an adult, yeah, There you go. Okay, so the S&P here today, silence to start the day. Very calm and quiet. In fact, we go on over here, take a look at the S&P sectors. This is the one-day performance of every single sector out there. To start the day, just normal chopping back and forth, small little range, 2 p.m. Eastern, and blah, 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 blah. It goes all kinds of crazy. People adjusting to the Fed, all the algorithms making their decisions. Remember, there's always a move and then a counter move before settling in. Today, that was the same thing. Move, counter move, settled in. So that is very much driven by the algorithms and, not much else. Now we turn our attention to what? We just spent all this time like, the Fed, what are they going to do? Now what do we look at? The attention goes back to earnings, which is doing great, actually. Inflation, although we have to add more stuff now because the Fed said inflation is not going to be our only measurement tool. So now we're looking at the impact of the debt ceiling. Market fell 17% in 2011 when we had the debt downgrade because we shut down the government. There was all this chaos. Makes you think that's not going to happen again. We have that whole banking thing that's going on that people keep paying attention to. We don't like China, and they're fighting for some reason, but yet we all hang out with Chinese people. But the government, Chinese, U.S., they're not getting along there. Commercial real estate, now that's a thing. So there's all these little things that sort of rank in priority. And we're like, commercial real estate, okay, starting to be some rumblings there. What's going on? Is that going to be like a mini kind of a banking thing there that could take down some of the other banks? And lastly, are we going to have a soft landing or not? Meaning, are we going to go into a deep recession, or are we just going to have a minor kind of recession and work our way out of it there? So we'll see what happens there. And remember, at the end of the day, there's less money participating in the stock market. It is clear as day that there is less money participating in the stock market. If we go over and look at this is where the dough is currently flowing, right? It may be a little tough to read there, but money market, getting the most amount of money there, up $589 billion year to date. You've got, let's put it over here. Yeah, there we go. We've got everything on the government bond, international bond, retail kind of bond stuff doing well. All the way over here, we have U.S. equities. Right? Around the world, domestic equities in different countries and stuff. Okay, money's leaving there. It's going all to safety and things that are, of course, safer over there. What does that mean for the stock market? If we go over to the stock market, there's less money participating. We need buyers. If all the buyers are taking their money out of the stock market, which is clear now that we can see that, and they're putting it in safety, where's the money that's going to lift the markets there? So something definitely to consider as you're looking at big investments in the market. Wait, I had one more thing. That was just last month, by the way. So let's go over here. So this is year to date, although I was showing the month change there for money market funds. But take a look at this. Look around the world. What's going on around the world? If we took every stock market, every money market fund, every bond fund that's out there, we have more money around. That's almost $2 trillion. Moving to safety. People want that safe return now because it's a reasonable rate to do so. Right? Who can blame them? So around the world, the same thing is happening there. This is not just a U.S. thing, right? Look at Europe the other day, raised rates there out of nowhere, raised rates. So now all of a sudden money going there. So around the world, stock markets, do they have $2 trillion more dollars to participate in? No, it's all sitting in the safe spot there. So we need a catalyst. We need something to convince people, yes, soft landing, everything's going to be fine, don't worry about it. That's not out there right now. You could feel it, right? I get the emails from you guys. You guys aren't silly there. So that is what's happening in that neck of the woods there. Also, if I could point out, you notice more money moving to defensive areas. I'll use the XLP as instead of moving into cyclical areas. So look at the XLP's performance versus something more cyclical here. Nothing. Money's not interested in going there. People are playing just ever so slightly a little bit of defense. You've got gold a little bit higher there. I'll cover that here in just a second. But you got gold a little bit higher. You got oil lower. Those are all defensive moves in the stock market. So I'm hoping we got our recipe here for a little bit of a pullback. Right? I know you guys wanted that. I would also point out that now that we have the Fed presumably at the end of their rate hikes, I'm going to say that that's the case, now we can see what the market believes about how well they're doing. If the Fed was doing well and not driving us towards a recession, would we have consumer staples doing so well? Consumer staples are slow, boring, things we're going to buy anyways. Toothpaste, toilet paper. You get what's going on here, right? So we could look at the bond market. So you look at bonds moving higher there. Now, if bond prices, not yield, if bond prices start moving higher, that's the market telling you, we don't think the Fed's got it right. They're behind the game. Right? So it'd be really cool to kind of measure that going forward. Also, I would say, remember that if you're thinking gold and you're one of those gold bugs out there, okay, fine, know what you're getting into, but know that gold investors are always late to the game. That's not my opinion. Remember, I drive by fact here. So look at the retail money flow into gold relative to the performance. And so right now, what do you have? Gold's peaked already, light blue in the background there, 3-month returns. Okay, we got a nice little peak, but now money's coming into it. This is all retail. This is not the institutional money. Look at what happens in the past. We have gold taking off. Money comes in a little bit, pulls back. Gold takes off here. Money comes running in right as it pulls back, right? Every time money rushes into gold, it's late. That's one of the things that people look at and we talk about, like in the institutional side of things, is when the retail investor's moving to gold, it's time to move out of gold, right? You know you're about to find your top. So keep that in mind. You're always late to gold. All right. Man, I had a lot to say today, man. A lot going on there. Let's see. Yeah, I'm good with that. All right, so let's go on over here to some stocks in the news. How about that? Now we'll take your questions. Let's go on over to the charts. We got AMD. There you go. AMD reports earnings. They beat. Almost everybody beat again today. Actually, today would be the weakest of all days. So if you look at all the companies that reported, there were 3 names that missed on earnings, where yesterday there was only 1. So we look at AMD there. The issue for them, and I think you welcome this because a lot of people like AMD better than some of the others out there. So this might be a welcome pullback. Guidance, a little bit weak. They said, yeah, we see a turnaround. We do, but it's not as strong as the other guys are saying. That's obviously bad news for them individually. It could be a company-related problem in the short term, or it could be an industry-related problem. Either way, it causes that stock to pull back, and I know a lot of you have been looking for that pullback, so I wanted to point that out to you. Estee Lauder, this was a horrible one here. So Estee Lauder, they missed. They were one of the ones that missed here today. Earnings were off by about 8%, which is a lot of money for these guys. But it wasn't due to the U.S. We're spending money on this stuff, your lotions and potions and stuff. We're spending money on it. Weakness overseas. That's a big sales location for them. 41%, I believe, comes from overseas. Also, they're selling less, and margins are tighter. So they made 3.4% less of a profit margin on those products that they sell. And then the really bad part about it was full year, for the rest of the year, they said, expect about 30% lower than what you guys are thinking. And well, there you go. That's what happens when a stock says things like that. Ford beat on earnings, kind of an uneventful earnings report there. Guidance kept the same, sales kept the same roughly, so not a big deal. No gotchas or anything like that. Starbucks, I honestly didn't catch what the problem was here. They beat on earnings, revenue, sales, and all that, and guidance was the same. I saw some comments about China, maybe not the speed they were looking for over there, but I didn't get too much into that one. Just wanted to point that one out, so I don't have the best of knowledge for you today. And then Chevron, not Chevron, CVS, totally different company there. Beats on earnings. They did lower their guidance going forward. That was okay. That's part of the focus there. But if you take that out, well, I don't know why you would, but if you took that out and you were just analyzing the rest of it, it was good. Good earnings there. So maybe a little bit of a washout here. I'm not 100% certain on that one just yet. Yeah, really only one little bad spot there for them. Going into tomorrow, let's see if I can do it this way. Oh, there we go. I got it. Oh, that's how you do it. Tomorrow, guess who reports earnings? Cody, take a guess. Oh, good guess. Yeah, very good guess. Did you know that already?
Yeah, from our social post. Yep.
Oh, yeah, that's right. Okay, so, all right. Well, anyways, that's going to be a little bit of a focus there. Hasn't made a lot of the mainstream media except for in the last maybe 2 weeks, like when you look at something like a CNBC or Yahoo Finance. But I will be all over that because I'm just curious, like, of the numbers that we get, will that be a problem for them? You know, that little blunder they had socially and in their marketing department. You also got Wayfair, and then after hours, Apple will be the big focus. Booking Holdings is always an interesting one to see the health or the what would you say, the want to spend money on vacations and spend more dollars per available night. So that's one of the stats we'll look at there. And then Block reports earnings as well. Yeah. So I'll try to take your questions here and see what I can do for you. Let's see what we got here. What happened to Starbucks? Yeah, I mean, I don't know. That would have been one. I just said the same thing about that I said about Yum Brands and the others, that if it gapped up on earnings, okay, I could understand that selling off there. Maybe it was up after hours or something, but I don't know. We'll see. Mike says that obsession with these just 2% inflation here, that's just tanking the whole economy. Remember, the Fed said like 2-ish%. And so a lot of their current projections have it at like 2.7, 2.9, depending on who's putting their guess out there. The number 2%, like getting it down that far, boy, like we all have to just stop spending for a while. I don't see 2%, but I wish them well, you know. Yeah. Another bank going down, PacWest finally taking the hit. Yeah, I saw that popping up yesterday. Let's see, 642. Ooh, yep, that's a shave and a half there overnight or in the after hours. Closes at 642, currently trading under $3. Yep. They're talking about a potential sale. So, well, that just depends on what do we have going on here. So, no, they're not talking about a sale. There's nobody interested in buying them at the moment. When a company says we are weighing our strategic options, including a sale, that means we're in trouble. Anybody want to buy our desks and stuff? So, yeah, another one of those going on. Consolidation of the banking industry there. Yikes. It's what it is. It's what it is. Is the economy worse than everybody thinks? The economy is definitely slowing. I'll give you that. It is definitely slowing. We haven't seen it too much in house prices. You guys notice that in your areas? House price. I know Florida's maybe had a little bit of a buffer, just people moving in. There's really a lot of people moving to this state. But I've just noticed as I'm talking to more and more clients, we're looking at some of these homes in their areas and stuff. I'm not seeing a whole lot of pullbacks in price there. That part could be the final like push, right? I don't know. We'll see. We will see. Best of luck to the regional banks out there. That's one of those things I'm glad I'm not playing along with. But I will wish you guys a good rest of your day. I'm going to wrap it up and get out of here. Tomorrow, Wine and Wealth for clients. If you're interested, you'll know where to find us. We'll be live in the dojo. And then, of course, we'll be back here to do this all over again. That's all I got. See ya. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.